Hey everybody, your friendly neighborhood Glenn here at the NYU Hospitality Conference. I've got Michael Edwards of Castlerock, and I want to thank our good friends over at Unifocus.com, technology that drives value. Check them out at Unifocus.com. So we're here at the NYU Hospitality Conference. I haven't heard a lot of talk about where we are with money, and getting deals done. How are you feeling about that?
A little apprehensive.
Yeah.
I think if you're willing to pay the high price of debt, then you can get in. If you're in a fortunate position to have kind of a cash stack that you can just pay it all in cash and wait till the debt comes down.
I got a cash stack. I got a pile of ones. I got at least 20 of them.
Right, make it rain. Make it rain. But no, it definitely provides some challenges to get a deal done, that you have to kind of really make sure that your models and your performance make sense before you jump in. Otherwise, you're going to be in a bad spot.
All right, so this is one of the things that I find interesting. We're talking about actually seeing if a deal is viable. And now that interest rates are going up, it makes certain deals less appealing, right? So what is the fundamental difference between a deal you would have done, let's say, in the end of 2019 versus today?
I think in the end of 2019 or even mid-2019, the trajectory of the market seemed like it was still going.
Right.
In fact, there was a lot of people smarter than me saying that, hey, until it stops, and 2020 is going to be the best year ever, and then it wasn't.
Right.
And so, I mean, you were still probably comfortable with, a 6 cap range on buying a hotel. You could, if you felt like you had to trim down a little bit on certain costs to save margin, you probably could have. Whereas now, it's very much more methodical.
Right.
I would say when you're looking at the deal, and not that you were inefficient, but as the industry saw going into the GFC, like sometimes you just get fat that you don't even realize that you get fat, and then when something like that happens, you've got to thin down really quickly. And COVID was a lot more pronounced. So now you look at it from the GFC 10 years ago, COVID just 2 years ago. So now you really have an idea of the efficiencies that you can put in place and the levers that you can pull in order to make the deal work. And if you've pulled all your levers and they still don't work, then you just have to walk away.
All right, so let me ask you this question. Going back to the Great Recession, right? We used to have interest rates back then. And then after the Great Recession, that all kind of went away. And I think it retrained everybody to think differently about it. What is different now versus what might have been in place before the Great Recession that makes this a little bit different? What I'm trying to get to is, if we go back to where we were, is it such a horrible thing at the end of the day when we were all used to those kinds of numbers back before then?
I would say it probably depends on who you ask and what industry you're in. With the economy, like, there's cycles, and sometimes they look extremely alike, 10 years, 20 years apart. Sometimes they look different, but they're still alike 10, 20 years apart. So I would say that if you've got a good team, and I think that's probably one of the biggest things that happened during COVID, is all those people with the historical knowledge of even back to 2001 and the dot-com bubble and then GFC, like, they left the industry. And so you have that knowledge that's no longer there, and so you're starting with the younger generation that only knows low interest rates, and now they're freaking out. And so it's trying to go back and look at history and let it teach you, so that hopefully you don't make the same mistakes, because history is going to repeat itself. It's just a matter of if you're ready for it and are smart enough.
Well, listen, we're Americans. We don't learn anything from history. But thank you for pointing that out. I think that makes a lot of sense. And one of the things that we talked about on No Vacancy is the fact that there are so many younger people in our business. And I hadn't talked about it from the financial side. A lot of times from the hotel sales side, they used to becoming order takers, and now all of a sudden the fundamentals has been different. So just because things are a little bit different out there doesn't mean it's bad or good. It just means different. And folks like you are adapting to these situations. Thanks so much for being here.
My pleasure. Thank you very much.
Thank you. And thanks to Unifocus. See you guys later.